Founders, Brad here. So we are back with another weekly episode of what are smart value investors buying this week. Okay, this is from a thread in Corner of Berkshire in Fairfax. What are you buying today? Okay, so I just looked back over the last week and I pulled companies that investors in COBF said that they were buying. And we have a lot this week, April 22nd. Back to April 15th. So we have 21 different companies here that investors in COBF have bought in the last week. So we're going to run through these fairly quickly. I just want to quickly remind everyone what the score is, okay? Because I've sorted these companies by score. So there's three components of score. The first one is insider ownership. Charlie Munger says, show me the incentive and I'll show you the outcome. So we really want a management team that's going to make the best decisions for shareholders. And it's much easier for the management team to make those decisions if they themselves are shareholders. So I like to see an insider ownership above 10%. So that gets you a point. The second score column is gurus. According to Dataroma, how many guru investors, how many great investors own this business as of the last 13F filing? So we can see how many gurus own the business. And the last column here for the score is Value Investors Club. Is there a write-up in Value Investors Club where I can go, I can read that write-up and get, a pretty well-rounded sense of the bull case for the business? It's also helpful to have a bear case. What I love most is if there's two write-ups in VIC that are fairly recent, one for the long thesis and one for the short thesis. That's awesome because then I can really see both sides of the argument for a business. So, like I said, I sorted these by score. There's two businesses that meet all three of these: Insider, Guru, and VIC. Recent write-up. These last two columns, acquirers multiple, is really a measure of how cheap the business is based on the last 12 months of earnings. Enterprise value divided by the last 12 months of operating income. And then this last column, revenue growth over the last 10 years, or in some cases, if I don't have that much data, I used 8 or 9 years. How much has revenue grown per year, which is a great indicator of, how strong a company has been growing, and hopefully an indicator of how much growth the company has over the next decade or two. So those are some of the metrics we're going to be looking at. Let's run through this list of 21 companies. So the first one, Madison Square Garden Sports. This is the first time this has been on the list in the month and a half that I've been doing these episodes. We have seen Madison Square Garden Entertainment, but Madison Square Garden Sports is a little bit different. It's, a couple of sports franchises in New York, and there's also a couple of venues that are owned by MSGS. I think it's a recent spin-off, which is why we don't have some of the data here for the acquirers multiple. This company has been losing money over the last handful of years. I believe that's why there's no acquirers multiple. And revenue growth, I'm not sure. I'm not so interested in this company, so I didn't dig too deeply into it. But these metrics are pretty nice. The three kind of filters that I use to kind of get a first hit of a business. But like I said, I'm not so interested in this industry, this area of investment. The second, Green Brick Partners. First time this one has been on the list here. This is it's the largest holding of David Einhorn, okay? Greenlight Capital. home building and land development company in the U.S., fairly small, 1.2 billion market cap. And Einhorn owns 48%. So, the other 5% is owned by, the management team and others on the board. So, very impressive position for David Einhorn there. Let's just jump into ticker. We can take a look. Greenlight Capital is the investment firm for David Einhorn. You can see Green Brick makes up about 23% of the portfolio. So, the next highest is quite a bit less than that, at just under 9%. So pretty high conviction. There's a little bit of selling in the fourth quarter of 13D. I'm not super familiar with the 13D. I think that's probably because he's a majority owner and he sold. So as a majority owner, anything over 10%, if you own more than 10% of the outstanding shares of a business and you do anything, you basically have to report it right away. So that's probably what this is. It looks like maybe in February, David Einhorn sold about 4% of the position there. But, not too big of a deal, 4%. So again, it's not really an industry that I have interest in, home building. I don't have any specific knowledge in that sector. So it's a pass for me. But if you follow these two industries, these could be companies to really look into. These are inspiring numbers in the filters here. So the third on the list, Alibaba, we've talked about this one. It's probably been in more than half of these episodes from Corner of Berkshire and Fairfax. So I'm not going to share any more on it now. Etsy, I believe, was in the last episode, maybe the last two. Two-sided online marketplace based in New York, really for artists. So I don't have much to add on that one at this point. Etsy. Number 5, Indus Realty Trust. So this was in the list, I think, about a month ago at some point. This was formerly known as Griff, okay? An industrial/warehouse REIT in the U.S. Pretty small market cap, under $500 million. And I believe they got a contract to build out some Amazon warehouses. So that seems to be a big part of their business model at the moment, focusing on warehouses for Amazon. Very impressive insider ownership at 25%. And this VIC write-up is not for INDT. It's under the ticker GRIF, which is what it was before it switched, I think in February of 2021. So, check out this write-up if you're interested in industrial or warehouse REITs. Next one, Discovery. We've had in the last couple of weeks on the list, a media company that owns and operates various TV networks. Discovery made the news because it was one of the companies that got sold down pretty hard from the whole fiasco that happened. What was the name of that firm that blew up? I'm forgetting. I don't think I even know how to pronounce it very well. But Discovery was impacted by that. And you can see 4 gurus and a fairly recent write-up in June 2020 for Discovery. I actually own some Discovery, the Class A shares, through my experiment with the Magic Formula portfolio. So, and Discovery has done quite well in that. Next on the list, we have Etsy twice. That's not what we want. So I'm going to pull this down. Let's see, edits. We're going to get rid of Etsy that time because we don't need it twice. Altria Group. First time I've seen Altria Group in here. Now, I don't have any interest in Altria tobacco products. I'm actually allergic to tobacco. So, I wouldn't use the products. And I do have a bit of an issue with companies that sell addictive products like tobacco. So I don't have any interest in this one. And it does seem, either mature or in its decline, from what I can tell by looking at revenue growth. Revenue growth is growing incredibly slow. The acquirer's multiple, this is about the lowest I've seen, aside from Shinnikin, which I think I talked about in the first one on March 11th. But 10 acquirers multiple is very strong. It's a pretty large company, less than 1% insider ownership. So you can tell management doesn't have a lot of skin in the game, which is a concern as well. I was surprised to see they've gotten into wine, okay? Not just tobacco products, but also wine for Altria Group. Number 8 on the list, the St. Joe Company. This is one I've noticed through Dataroma as one that, a super investor has a very large stake in, and that's Bruce Berkowitz of Fairholme Capital, 44%. Essentially, the entire insider ownership is attributable to Bruce Berkowitz. He's on the board. So, real estate development, asset management, and operating company in Florida. About $2.5 billion market cap. Again, one guru owner, that's Bruce Berkowitz. So, you got this score of 2, all attributable to Bruce Berkowitz. So take that with a grain of salt. Quite pricey on a last 12-month earnings basis, and 5% revenue growth. And I think the revenue, it's been quite volatile. I think 5 years ago, the revenue was like 7 times what it was in the second highest year out of the last 10. So quite volatile there. Not something I'm really interested in diving deeper into. The next one, NVR. I believe this is one that Monish Pabrai has talked about in recent lectures at business schools as a great example of a company that buys back a lot of stock, one of these Uber cannibals. And because of that, NVR has done quite well in the last decade. I think it's got a 21% compound annual growth rate in the last decade. So very strong performance. Home builder and mortgage banker in the U.S. Nearly 18 billion market cap, just shy of my threshold, my 10% threshold for insider ownership. So it doesn't get a point there, but 3 gurus and a very fresh write-up in VIC gave it a score of 2. Pretty impressive acquirer's multiple, actually. This is an acquirer's multiple that I often see in my Magic Formula stock picks. Usually they're between, 6 and 12. So 13 is fairly cheap, which is impressive. Revenue growth 10% over the last 10 years. So, NVR looks actually somewhat interesting at the current price. But again, home builders, I just don't have any particular expertise in that industry. So I'm gonna take a pass on NVR. British American Tobacco has been in past episodes. Again, tobacco products, not something I'm interested in. This is a UK company, obviously British. 86 billion, very similar in size actually to Altria. Same level of non-conviction from management, less than 1%. So really just 1 point for the recent write-up, August 2020. Again, acquirers multiple, same as Altria Group, 10. But much better revenue growth than Altria. So, if I was going to look into a tobacco company, a fairly well-established tobacco company, it would probably be British American Tobacco. Next one, Viacom. Same situation as Discovery. This one got hit by, whatever happened last month with these hedge fund meltdowns. Global media and entertainment company. And I've talked about this one before in this series, so not going to go too deeply into this one. There is a short write-up from July 2020. I believe there's also a long write-up from February of 2020. So that's great. You get to see kind of both sides of the story from 2020 for Viacom. So if you're interested, check out those two write-ups. That's all I got to say about that one. Tencent Holdings, okay? Investment holding company in China. I believe Tencent is big in kind of the online gaming space. I haven't looked at, a breakdown of revenues, but pretty sure that's one of the bigger components. Larger than Alibaba, okay? So very large Chinese company, $762 billion market cap. Again, just shy of that 10% threshold for insider owner at 8%. No gurus own this one. So this is over-the-counter market with Tencent Holdings. So it's possible there are a number of gurus who own it right out of the Hong Kong exchange that aren't showing up here. But I haven't figured out how to really account for that yet. Again, a write-up just over a year ago. So check that out if you're interested in Tencent. Acquires multiple 40, okay? So it's expensive on an earnings basis, but for growth of 38% per year, could be reasonable. You'd have to really look at, what your projections of growth are over the next 10 years to get a sense for, how reasonably it's priced today. Personally, I like Alibaba better. It's got a higher revenue growth over the last decade, and it's slightly cheaper on an acquirer's multiple basis. And it's got a lot of other things going for it as well. So next one, Prosus NV, okay? E-commerce and internet businesses based in Amsterdam. So 180 billion market cap, virtually no insider ownership. 3 gurus own this one. And actually, the biggest guru that owns this one is Sequoia. Okay, and I have a ton of respect for Sequoia, but I don't think this company has ever been profitable. Okay, that's why there's no acquirer's multiple. It's had negative operating earnings every year. So not really something that I'm interested in looking deeper into at the moment. Revenue growth has been very impressive. Part of that might be it started at around 19 million of revenue 10 years ago. And so part of this, when you see a huge revenue growth, it's because I'm comparing the revenue 10 years ago to the revenue this year. And if it had a super low revenue to start, that can impact the growth rate, kind of tweak it in weird ways. So I wouldn't take this 82% at face value. But that's that one. The next one, I won't even try to pronounce. This is an industrial conglomerate out of Denmark. They do a lot of things. So they make fish feed for salmon farming. They do a lot of they're in a lot of unrelated businesses. So it's truly a conglomerate. 2.5 billion market cap. Impressive insider ownership at 18%. Again, a pretty interesting acquirer's multiple at 13, very reasonable, and revenue growth of 8%. Okay, so that's that one. It's interesting to see more foreign holdings in this week's What Are Great Value Investors Buying. The next one, PureCycle Technologies. So this one is actually really intriguing to me. They have a process for converting plastic, right, mixed plastic, into a very pure plastic. I believe it's polyethylene, okay? And they make these little polyethylene pellets, pebbles. So, this topic is near and dear to my heart as someone who's into permaculture, into sustainability. Like, plastic is such an issue. It's such a problem. I don't think we have very good solutions for recycling a lot of the plastics that we have these days. So could be a very promising company here, both for doing good in the world and if it can do it profitably, it could be could grow into a very large business. So I'm going to look into this one. It was a SPAC that brought this public just last month. And I don't know much more about it. There's not a whole lot available on it yet, because I don't think that deal has even closed. It's been announced, but I don't think it's closed yet. So that's that one. The next one, Plby Group. This is Playboy Group. Okay. Apparently, Playboy decided to leverage its brand, it claims to be one of the 20 most well-known brands in the world, which is interesting. Pleasure and leisure lifestyle company. Okay, Playboy Group is being brought public through a SPAC from February of this year, 2021. $1.5 billion market cap. It reminds me, Warren Buffett once said, most guys read Playboy. I read annual reports. Well, it looks like now we can read both. So this is fantastic. I don't have any interest in Playboy or what it does. So I won't look deeper into this one. But, I looked at a presentation on their website earlier today, and they talked about 2019 revenue, 2020 revenue, and estimated 2021 revenue. And it's pretty strong growth. So something you're interested in, check it out. The next one, Intellicheck. This is by far the smallest company on the list. And the guy who said he was buying on Corner of Berkshire and Fairfax, he even warned, highly speculative, may lose all his money. But thought it was worth at least a small bet. Threat identification and identity authentication solutions out of New York. Intellicheck made one of these weekly lists, I think early on, maybe in the middle of March sometime. So again, nothing that checks my boxes. It's going to be too small in all likelihood for any gurus to own it at 155 million market cap, just shy of my insider ownership threshold, and no VIC write-up. So, and I'm pretty sure it's been losing money. It's really in startup mode. So that's that one. Preferred apartment communities. This one has made the list at least half of the weeks that I've done these episodes. It's doing well from that perspective. Class A multifamily properties in the southeastern U.S. 500 million market cap. Doesn't check any of the other boxes, but revenue growth is very impressive. Okay. And the guy who first said he was buying this on Corner of Berkshire and Fairfax started a thread for preferred apartment communities. So if you're interested at all in multifamily REITs, check this one out in Corner of Berkshire and Fairfax. Okay, second to last, Flow Traders. This has been in these lists before. Liquidity provider for financial products based in the Netherlands. Okay, almost 2 billion market cap, 31% revenue growth. The interesting thing about this one, it's got a negative enterprise value. Okay, which I get intrigued when I see that. Often what that means is there's more cash. The company has more cash than debt and equity. Okay. So that can be interesting. In a sense, you can think about it like the company is paying you to own it. Obviously, that's a dramatic oversimplification. If it looks like that's the case, usually there's something there's hair on it, right? But it's compelling. It's interesting to see a negative enterprise value. You don't see them very often, at least in the U.S. So again, outside of my circle of competence, I'm not going to look into this one, but might be interesting for some of you. And the last one on the list, Gores Holdings. So this is a SPAC, and it announced its target, Matterport. Now, Matterport is a real estate software as a service for immersive 3D remote tours, okay, which is really interesting to me. I think this is a space that can really grow, especially, given the pandemic. People want to look at homes, they want to look at houses to buy, but they don't necessarily want to visit, right? Go to open houses and all that stuff. And it's possible people are going to be more and more open, even after the pandemic, to doing these virtual tours, at least for an initial look at properties. So, I think the case for this to grow into something, it makes sense to me. The question is, how many other businesses are trying to do this? What is the competitive landscape? Does this company, for some reason, have a competitive edge, a durable competitive advantage? That's something I need to dig into. But I might take a look at this one. This one really did well after the deal was announced for Matterport, and then it's come down quite a bit since February, I believe. Really, all SPACs, it seems like, have just gotten pummeled since February or January. So might be throwing the baby out with the bathwater in this case. So I'm going to look deeper into that one. So that's it, guys. 20 companies that smart value investors are buying this week. What am I going to look deeper into? Like I said, Gores Holdings and Matterport I'm going to look at. PureCycle Technologies is what I'm going to look at. I think that's it, guys. Just those two, PureCycle and this SPAC that's targeting Matterport. Those are the two I'm going to dig deeper into. Let me know what from this list intrigues you. If any of these are on your watch list, if you own any of them, let us know down in the comments. Let's kind of discuss some of these in the comments. It's a fun way to keep the conversation going about what these smart value investors have bought in the last week. So anyway, guys, hope you enjoyed this episode. I will see you all in the next video. Take care.